Good morning and good afternoon. Thank you for attending today's webinar. Before we begin, let's cover a few housekeeping items. At the bottom of your screen are multiple widgets for you to use. All are resizable and movable. Feel free to move them around to get the most out of your screen space. If you have any questions during the webcast, you can submit them through the Q&A widget. We will try and answer these during the session, but if we run out of time, these will be answered later via email. Please know we do capture all questions. We will be using interactive polling during today's session and encourage you to participate. Additional materials are available in the resource list. Please download those you may find useful, and you can find out more about our speakers via the Speaker Bio widget. For the best viewing experience, we recommend closing all programs and browser sessions running in the background. This will help conserve your bandwidth. The webcast is being streamed to your computer, so for the best audio quality, please make sure your computer speakers or headset volume is turned up. Some networks cause slides to advance more slowly than others, so logging off your VPN is recommended. If your slides are not progressing, pushing F5 on your keyboard or Command R for a Mac will refresh your page. We value your feedback, so please do complete the pop-up survey at the end of the webcast. An on-demand version of this webcast will be shared tomorrow and can be accessed using the same audience link that was sent to you today. I am honored to introduce our moderator for today, our EMEA Performance Director for Investment and Advisory at Refinitiv, Franita Neuville.
Thanks, Renee. Just checking that you can hear me properly.
Yes, perfect.
Thank you. Right. Good day, everyone, and thank you for joining us today for our ESG webinar, which will specifically be focusing on ESG in Africa. So I think we all know the level of applying sustainable investing across our continent varies vastly between different countries and markets. And the availability of ESG data for African firms is often cited as one of the reasons for this difference. So today we will be discussing these differences while also considering the role that exchanges play in promoting the disclosure of ESG metrics by listed firms, as well as the adoption of using ESG metrics when making an investment decision. We have a very exciting all-female lineup for this session, and I would like to quickly introduce our panelists to you. So first up, we have Tinuade, who is the Executive Director for Regulation at the Nigerian Stock Exchange. She has the responsibility for the regulation of the two primary stakeholder groups of the exchange, which is obviously the dealing members as well as the listed entities. And her team is responsible for rulemaking and interpretation, monitoring, inspection, and market surveillance. Currently, she also chairs the corporate governance committees of the boards of the Financial Reporting Council of Nigeria and the Central Securities Clearing System. Welcome, Tinuade. Then secondly, we are joined by Shameela Soobramoney, who is the Johannesburg Stock Exchange's Chief Sustainability Officer, and is the current chair for the World Federation of Exchanges Sustainability Working Group, as well as a member of the strategy group of the Global Investors for Sustainable Development Alliance. Welcome, Shameela. And then last but certainly not least, we have Elena Philiipova, who is the Global Head of ESG at Refinitiv. She is responsible for the end-to-end management of Refinitiv's ESG business, products and services. And she is also the rapporteur for the benchmarks group of the EU Technical Experts Group on Sustainable Finance, which was appointed by the European Commission. Welcome, Elena, and thank you to our panelists for joining us today. So we're actually quickly going to start off by asking the audience 3 polling questions, and we would really appreciate your participation in this. And this process is purely just to get some interaction, obviously, from your side, and for our panel participants to better understand the audience they are addressing and your understanding of ESG. So we're going to be moving to our first polling question now. And you should be able to see it on your screens. The question is, what type of company do you currently work for? An asset manager on the buy side, a hedge fund on the buy side, an asset owner, sovereign wealth fund, or pension fund on the buy side, a stockbroker on the sell side, an exchange, a corporate, or other. So we would please ask you to now submit your answers. I'll give a couple of seconds to the audience to do that. Right, let's go to the polling answers and see. Good, there's some answers that have come through. So 23% of our community on the call today is from an asset manager on the buy side. About 3.8%, almost 4% is from an asset owner or a sovereign wealth fund or a pension fund on the buy side. And then we have about 12% participation from exchanges, and almost 16% participation from corporates, and then the others make up about 46% of the audience. So thank you everyone for your answers there. We'll be moving to the next polling question. So the next polling question, we'd like to know whether you use, integrate, or consider ESG as part of your workflow. And again, I'll give a couple of seconds for you to answer this question. It's a simple yes or no answer. Okay, let's have a look at the answers here. Wonderful. So almost everyone on the call say that they use, integrate, or consider ESG as part of their workflow. That's great to see. Right, so our last question is around the role that exchanges play. So we would like to know what your thoughts are on what role exchanges play in driving the ESG agenda within their markets or within their region. So do they have to promote ESG transparency by making ESG disclosure mandatory listing requirements? Or is the role to promote ESG transparency by making ESG disclosure optional? Or the third question, is it mandatory disclosure with the promotion of integrating ESG information in investment decision-making as well? And then our last option here is to say that exchanges play no role here. So please, I'll give a couple of seconds for everyone to submit their answers here. Okay, we'll go to the results. Okay, so interesting to see. Most people actually chose the third option, which says that exchanges' role is to make disclosure of ESG metrics for listed firms mandatory, as well as promote ESG integration in investment decision-making. So that's great to see. Great. Thank you, everyone. We greatly appreciate your feedback here and your participation. So I'm just quickly going to go back to this slide. There we go. And then we can go on with the presentation. Right. So what we'll do now is we'll actually kick off with the actual panel discussion. So our first question to the panelists ties in with the last polling question we just had. So what role does exchanges play in driving ESG disclosure with a view to help achieve the sustainable development goals within their markets and or regions? And is it solely up to them to push this agenda, or are there other stakeholders that are also key here? So Tinuade, we'll start with you. Can you give us a view of what role the exchange currently is playing with regards to the Nigerian market, and maybe if you have a view for the rest of the region, we'd like to hear that as well.
Okay, thank you very much. The exchange has a role to play with respect to disclosure. And I think it would really, first of all, exchanges by their very nature, because they're markets and the types of regulated markets that they are, disclosure, transparency, integrity is part and parcel of what one would expect as an exchange. And so on that very basis of the fact that it's an exchange, you would expect that it will have a role to play. Specifically with respect to ESG factors, I think exchanges have a very critical role to play. And if you look, using an example of the Nigerian Stock Exchange experience, where if we look at the green bond market, we had 0 green bonds in 2016, and now we have $136 million out of green bonds, four green bonds, 2 sovereign and 2 corporates that we have. Certainly the exchange played a very significant role. Before I go into the role that the exchange played, very briefly, you also asked the question, is it only the exchange? No, there is a whole ecosystem that has to work, that the exchange has to engender to work with it in this role. And so using our own example, what we did was in 2013, for example, we joined the Sustainable Stock Exchanges. The reason why we did that was because we wanted to be among the stock exchanges, the Sustainable Stock Exchanges Initiative. The reason why we did that is because we wanted to be amongst a group of peers where there could be osmosis, learning from their own experiences and seeing what they were doing. And very quickly after that, we then realized that we needed to build an ecosystem around it if we were going to make anything work. So we started by a conference in 2015 where we generally talked about using a bottom-up approach, looking at inviting stakeholders to say what kind of standards do we want to create for this market? What kind of principles do we want to create for this market? In terms of the disclosure. And from there, we started building. We had another a seminar in 2016. We had a public commentary in 2017. Now, in all of these, we were working with stakeholders. We also had the Global Reporting GRI working with us. We had E&Y working with us. So that goes to the partners, somebody from the assurance, an entity from the assurance space, as well as an entity from the reporting space in order to work with us. And then we had the usual people representing various organizations that were working with us on this journey. But we certainly were had our hands on the till and had our hands on the laboring oar to ensure that this was going to happen in order to get our sustainability disclosure guidelines eventually come out.
Yeah, I think we might have lost Tinuade there, unfortunately. Right, I think, yeah, okay. I think let's go on to the next panelist while we get Tinuade back. Shameela, I'd like to move on to you, and if you can maybe give us, your view from a South African perspective, and then also do you have. Here we go. Okay, and then also from a regional Southern African experience, if you do have any comments for the region. Shameela, sorry, I think you're on mute.
Just checking the sound.
There we go. Yeah, we can hear you now.
Fantastic, thank you. So a very good morning to everybody from all around the world. I believe we've got a strong presence from a number of different countries, quite a few on the continent of Africa and a few from elsewhere in the world. So it's a great pleasure. Thank you for having the JSE on the conversation today. So to answer the question, Franita, the Johannesburg Stock Exchange has been considering matters of sustainability broadly for a number of years now, in fact, close on 2 decades. So if we look back on our journey, just the kind of issues that we consider when we're talking about ESG or sustainability are the kind of issues that we see front and center that businesses and society are confronted with daily in a country like ours. So when we consider the impact on business, one has to think that this is actually important to the core of how businesses are conducted and will have an impact on them, but also that it is core to good governance. And so the actual consideration of all factors that are material in nature and that will impact on how business is conducted and that business's impact on society are matters that need to be considered at a governance level. So when Tinuade was speaking earlier on, she spoke about, just this broader context in which we operate and the fact that one holds issues of regulation and the like as being synonymous with exchanges. That, I think, talks to this broader governance ecosystem. So I want to take a step back and have a look first at where exchanges are located in the financial markets ecosystem. So we're just one of many players within that ecosystem. And I want to just draw the audience's attention to the resources section on the website that's available there. And there is a small 2-slide presentation from me, and you would have a look there. And that just sketches out what I'm going to tell you about the ecosystem, and hopefully the visual helps you a little bit. So we effectively see that there's that ecosystem we're operating. Yes, capital markets help primarily in the raising of capital and providing the instruments that people can use in trading effectively and being able to raise that. So you take money from who needs it and then can deploy that to those who need it to help economic growth and development primarily. And there's a number of instruments around that. So the exchanges themselves and what they can do in relation to sustainability and sustainable development will vary to an extent on how that ecosystem has developed, and also to some extent on the actual legal construct of that entity itself as the exchange. In South Africa, the JSE is what we call an SRO, or a self-regulatory organization, which means that there are certain regulatory functions that the exchange performs on the market. Primarily, that is the issuer regulation function, so that's really just policing companies that are listed and being able to ensure that they disclose what they need to disclose, that they behave in the correct manner, and the correct governance is put in place that is in line with being a publicly listed entity. So ensuring that that takes place. And so the entity that does that in the JSE is the Issuer Regulation Division. Then there's the other one, which is the Market Surveillance Division, and that is simply those guys that police trading and look at all the insider trading and all the fantastic things that movies are made of. So there are strong Chinese walls between them and the rest of the business, which is sort of what we, I suppose, loosely term the commercial aspects of the business. So when we put that together, we understand that an exchange in our context, or the way we see it, has 3 faces. It wears the face of a regulator, which are the 2 entities or aspects I've just described. It also itself is a listed company with obligations. In our case, we're listed on the JSE itself and has obligations as a listed entity. So we're a business just like any other business. And then, of course, we're the trading place where the actual trading happens. So we actually operate the market. We're a company on our own, and we're a regulator. And the role that we play in relation to ESG, we have said actually brings all of this together. The biggest impact we see us having is that we have via the multiplier effect on the listed companies that are on the exchange, and this broader realm of bringing together issuers on one side and investors on the other. So if you consider that, the regulation has a role to play when it comes to listed companies in particular, and there are certain mandatory disclosure requirements that the JSE has put in place. Some of them are ESG nature, and the particular ones around gender equality at a board level, racial disclosure at a board level, and the like, and the fact that your remuneration policy has to be put to vote annually. So when you look at that, they directly tackle challenges in a society like South Africa and asks for transparency. So that is the first part of how we put our foot forward in creating this enabling environment for more transparent practices to grow and to take root in the market as a whole. So it's that influencing role. So you can imagine 361 companies suddenly need to disclose a level of information that stakeholders then use and can engage with companies one-on-one. We also then, from a governance perspective, consider the King Code as being a really, an essential code for companies to look at. And so if you're listed on the JSE as a company, you need to report in accordance with the King Code of Corporate Governance. And that includes the explicit requirement to consider all material factors into your strategy, into your governance of the company, which includes your ESG factors, your sustainability considerations, and to report on those as a board in the way that you have conceived is in line with your materiality assessment, and talk about that story in a way that actually explains your value creation journey. So you're not talking about purely financial information, you're talking about all the information that is relevant. So that's another way in which we do that, and that is core to governance. The second area in which the exchange then looks at is tools and services. And this is then saying, so now we've promoted disclosure where we can on a mandatory basis. What else can we do in supporting more voluntary initiatives and actually creating almost like a moral suasion to say these are the things that you could do? So the first one we have in that regard is an ESG index, and that takes us back to 2004, I think, where we were the first exchange in the world to have an exchange-sponsored sustainability index and the first in emerging markets. So exchange-sponsored matters because often we've got index providers who do this on their own. But in this case, it was the exchange actually creating that index with a partner and making that bespoke to South African context in relation to what it wanted to measure and track. And so that was where we then promote disclosure. When it started, I think that there was very low uptake, very low understanding by and large. And of course, the sense of why are you pushing this? You know, we've got enough to do without having to think about all these other factors. But over time, we've seen that has taken root and has promoted disclosure on a more voluntary basis with companies in South Africa. And so right now, the second iteration of that index is in our partnership with FTSE Russell, and it's the FTSE Russell JSE Sustainability Responsible Investment Index, broad-based ESG rating, and constituents are basically decided based on their ESG rating. They meet a certain threshold. If they score above a certain score, then they are constituents of that index. Then investors can effectively look at this and say, well, these are companies who scored a certain score and above on ESG. Is this potentially something we want to track, and how does that look? There's a second derivative of that, which is the top 30. And so we take that, and that's an investable index, the top 30 highest ESG scoring companies. So that is a useful tool potentially to be able to use as a proxy or a benchmark. The second would be green bonds. When we look at green bonds, again, this is, and Tinuade, I'm sure, will pick up on it again when she speaks just now, but effectively is an instrument that can be used for capital raising where the proceeds are ring-fenced. So an investor knows directly that the money that they're investing is going to be channeled to green outcomes and to supporting the green economy, and effectively is able to track that separately because the requirement for disclosure means that that money needs to be ring-fenced and you need to report. Well, the JSE requires that you report annually on how those proceeds are being used from that particular capital raising. So we incepted our green segment in 2017, and so up to date have around about 7 billion rand in bonds listed on that segment, one municipal and the rest are corporate bonds. So very interesting instrument to be able to directly invest in those sorts of instruments. And then we've got a futures contract as well on the Responsible Investment Index, and a number of services that are supportive in nature that are around training and the like. And then finally, we also see our role as being quite strongly in advocacy and engagement. So the ecosystem is not going to develop completely by its own. It needs leadership, it needs understanding, and it needs role players who are willing to come together to promote the discourse in the market, to understand broadly what is sustainability, why does it matter, how can we measure it, how do we make sense of the alphabet soup that is out there in relation to frameworks and that sort of thing. And so that's another role that the exchange plays in being able to advocate strongly for that, create conversations and partnerships in the market that allow for, again, supporting this notion notion of creating an enabling environment for sustainability practices. And then, of course, for us on the advocacy side, we try and participate globally where we can, so we can learn from global discourse and bring best practice back into our market, but at the same time contribute our own experiences to the global market. In that regard, we are a founding member of the Sustainable Stock Exchanges Initiative going back to 2009, where we're one of 5 founding members. And today, the SSE has over 90 exchanges who are participating and wanting to learn from each other and further their ambitions in the market. So those are the ways in which we have set out our activities as the JSE, and are really enjoying see how this is evolving, particularly, I think, in the last 2 years. Thanks, Franita.
Thanks, Shameela. It's really great to hear all the initiatives that the JSE is currently undertaking and where it's come from, the history with regards to ESG. I can see that we have Tinuade back. Tinuade, do you maybe want to take 2 minutes and make some closing remarks on this, and then I'll hand over to Elena as well?
Yes, thank you very much. Can you hear me?
Yes, we can hear you properly. Thanks.
Okay. Yes. As I think the point that I was making is that the exchanges do have a role to play, but there's an ecosystem, and in our system where the market was just starting, we had a critical role to ensure that ecosystem actually worked with us and that ecosystem was carried along. And I think we were successful in being able to do that over a period of time leading up to our disclosure guidelines. The attitude that we have taken with our disclosure guidelines is that sustainability is a continuum for companies. And so what we've done is we've divvied up our boards and said that the premium board, which is a board of 8 that currently is comprised of 8 companies that are supposed to have the highest standards of governance and and being responsible companies in the ESG space, that those ones have to report in a mandatory fashion by the 30th of September of this year with using our disclosure guidelines, and that other companies should aspire. Now, the interesting thing is that I believe about 7 of those companies have already complied with that requirement. And so there's appetite there. And if, as an exchange, you're a catalyst, you will actually see that the ecosystem moves with you. And this is an area where it's a gift that just keeps on giving, and we expect that there'll be much more activity in the area. And we ourselves are not resting on our oars with respect to developing, other products, like the green bonds, which we'll speak about later. But also, we have an index, a corporate governance index as well. And we have a corporate governance rating system, which is applicable to all our companies. They have to be rated going by the corporate governance codes in Nigeria. So that's, I think, all I would like to add at this point. There'll be opportunities to talk a little bit more about what we do. Thank you.
Right, thanks very much, Tinuade. And now I'd like to move on to Elena for maybe a bit of a global view here on this topic. So is it very much different to what Tinuade and Shameela has just outlined happening in their markets, or is it very much in line with what they said? What are you seeing on a global basis with regards to this topic?
Thank you, Franita, and good morning, everyone. Thanks for joining us during this webinar to discuss one of the most important topics during the pandemic crisis as we are hopefully moving towards recovery. I think that, broadly speaking, what's been covered by the other panelists is in line with the importance and the role that stock exchanges play in this agenda. Stock exchanges are in a very unique position to promote ESG transparency and leverage their institutional capacity to build more sustainable capital markets. To facilitate the quick uptake of material ESG disclosure and raise the quality as well as availability of the data, many exchanges have created ESG guidelines for listed companies, and that's a very important step in the direction towards mainstreaming ESG integration into investment decision-making. However, I think that this is also part of the problem and really the elephant in the room. It's the lack of uniform global frameworks, as well as the voluntary nature of many of these disclosures. Certainly there are steps taken in the direction by numerous stock exchanges, as well as other market participants like regulators. And it's quite clear what needs to happen to solve for the problem. We need to work towards, and every stakeholder has an important role to play and contribute towards the creation and then the embracement of a global disclosure standard that covers the list of the material quantitative ESG metrics that companies across industries and sectors should be required on a mandatory basis to report on. The nature of the guidelines right now, broadly speaking, at the global level, tend to be directional, qualitative, narrative in nature, allowing companies the flexibility to choose what to report on. And what that creates is improved data availability and transparency, but at the same time it hurts comparability and consistency in corporate disclosure, making it a significant challenge for the investment industry to fully integrate that data into their mainstream processes and workflows. We also require templates of reporting. I mean, the analogy here that I encourage everyone to think about is the evolution and the journey that financial reporting has gone through in the past, many decades ago. This is pretty much the journey that I think we require for ESG data. And stock exchanges do play a very critical role. In addition to this role that stock exchanges play when it comes to data availability, ESG transparency, and guidance to the listed companies, Shameela made a very good point on the importance of stock exchange-led ESG indices. And we've seen that happening across many markets around the world. What this initiative drives really is not only better disclosure on behalf of the companies, but also influences corporate change at scale. It really enables stock exchanges to have a very significant influence on a large number of companies, to steer them in the direction of shifting their business model structures and practices to serve all stakeholders, rethinking about the corporate culture and how to prepare it for the future. And as outlined in the Agenda 2030 and the UN Sustainable Development Goals, really thinking about the strategic direction and embedding sustainability into everyday decision-making that companies are doing. And of course, that translates into reporting and transparency. Back to you, Franita.
Great. Thanks very much, Elena. Right. Okay. I think a topic that we probably need to spend a little bit more time on is actually the availability of data on African companies, the availability of ESG data. So, and Tinuade, I'm going to direct this question to you again first. So the NSE, as you mentioned, announced their sustainability disclosure guidelines in December 2018 with Nigerian listed firms expected to start reporting on ESG metrics at the end of September this year. So are these plans still on track? And I guess with everything happening in the world, some plans get pushed out. So it would be good to get an update on that. And then also, how prepared are Nigerian companies to actually start disclosing later in this year?
Okay. So the way that we've structured our guidelines to work is actually that the guidelines are mandatory for our premium board companies. And 8 companies that are currently listed on the premium board with capitalization of $16.5 billion. And we've said those companies have to mandatorily report in timelines. So the earliest timeline of September of this year, and that is for companies that 1 December 2019 year end. We have not changed the goalpost as that is concerned. In light of we still think that those companies should be able to report, and indeed what we've seen is that they have started issuing those reports. And so perhaps if we nearer the time believe that there is any reason to have another look at that deadline, we will do so. But as of today, we're pretty confident about it, and we think that it is something that these companies want to do, and we think that they will do it. Now, with respect to the rest of the market, that we need to work with the rest of the market to come to the point where folks will feel confident to do sustainability reporting the way that we foresee that it should be done. And so that's why we've taken a very hand-holding approach over the couple of years to continue to have seminars and workshops where we're providing guidance and interacting and trying to see what the pain points might be, and also being very open as an exchange to any questions or clarifications that they need. So the approach that we've taken to them is to say we want to encourage you to disclose, whether disclosed by a standalone sustainability report like the Self does and some of the companies on the premium board do, whether you disclose an insert to your annual report, start disclosing. And so we're watching that space, and we're continuing to work with them to try and ensure that this is done. We're not relenting. And the feedback that we're getting is that folks are doing things like hiring the right type of people, help with this. Folks are doing things like, asking questions. And we've also seen an increase in the number of requests for training from our ex-academy with respect to ESG fact generally. At the board level, is averting their minds and realizing that there's no way, not something that they need to focus on and that they intend to submit. Thank you.
Okay, great. That's really encouraging to hear. Elena, I'd like to keep with this topic and just pose to you the question as to why is it actually important for firms to disclose their ESG metrics, whether they're operating in emerging markets or developed world. Why is this information important to go out to the world?
Mm-hmm. Yes, and I think it's important to start off by saying that there are actually quite a lot of many truly outstanding ESG reports out there across all sectors and industries. So there is a lot of best-in-class examples, a lot of data already available. But as mentioned, the challenge that we're facing is around comparability and consistency when it comes to corporate disclosure. And that's primarily because of the lack of a uniform global framework. But going back to your original question, why is it important for companies to disclose? I think that first and foremost, from the company's perspective, it is really important to think about the new normal, the new way of doing business, especially as illustrated now during the COVID-19 pandemic crisis. Sustainability is the new norm. There is no other way to ensure that we create more resilient business models, economic models, and are prepared to sustain these as well as future pandemics that are on the horizon. So it enables companies to transform for the future. And sustainable companies are quality investments. They are more resilient, they recover quicker from crisis, and they are simply also more attractive from an investment point of view. And that brings me to the next point, which is the investor perspective. Why is it important for companies to report on their ESG practices? It is really to attract that rapidly growing sustainable capital which right now primarily comes from developed markets and developed market investors. But I would argue that's soon going to be the standard. And I do believe that the notion of ESG investing is going to disappear because it will be the way of doing investing. And really, going back to the companies themselves, being sustainable businesses and talking about it to all stakeholders, serving your stakeholders, will not only make the businesses more resilient and prepared for the future, but it will enable them to attract and retain top talent. And this is at the heart of any business and their ability to sustain growth and sustain financial outperformance.
Okay, great. I think that's a great summary. Thanks very much, Elena. Lastly, on this topic, I want to get some input from Shameela as well. So the JSE has been promoting ESG disclosure by listed companies for a long time now, as you've outlined in the initial question. So do you believe that this has given JSE listed firms an advantage in attracting foreign investors, especially those who incorporate an ESG tilt into their investment decision making, as Elena has alluded to in her answer just now?
Mm-hmm. So, Franita, that's a question that's not easy to answer directly in terms of if you wanted a reference to rands and cents or dollars, that have directly been acquired for our market as a result of ESG disclosure. So that is the difficulty that we face at the moment. However, what I can allude to is the fact that, we often are engaging with international investors who come to speak to the JSE, who want to understand what's happening, engage with us ourselves as a listed company, and then obviously take a look at disclosures in the market. And we're routinely amazed at the fact that, investors find the fact that this has been existing in the South African market for such a long time to be something that's fascinating for them, and that immediately changes the way they view South Africa as an investment destination and the disclosure and hence the investability of the companies. So I can use that as one proxy for where the fact that this ESG environment exists has been positive for our market. I think that is one area. Then if we have to extend that and perhaps and use a proxy a little bit, the fact that the growth in responsible investment globally, which Elena just alluded to, has been quite amazing as well. And if we look at particularly around Europe, where we've seen a big growth in that area, more recently Japan, the US is quickly coming online in that regard too. And we look at the fact that if you look at different estimates, they're talking about between 30 and 40% of assets under management globally following some sort of responsible investment strategy. They would need to have a level of disclosure that they can refer to. They would need to have indicators and data availability in certain markets to be able to make that those investment decisions. And I think the fact that we've had that available in the South African market would have certainly played in our favor as looking at a more favored investment destination. So those are some of the proxies I can draw from, and I certainly think that it has played a positive factor for our market.
Okay, great. Thanks, Shameela. I think that's a great indication for us. And I think often, the availability of data, specifically with regards to ESG in African markets, do get cited as a barrier to, ESG investing on the continent. So let's just stick with the barrier, topic for now. And Shameela, I'd like to stay with you and just ask, so a limited understanding of ESG and the SDGs and also a lack of data standardization are often mentioned as other barriers for ESG adoption, whether it be on the company side or on the investor side. So are you seeing these as barriers currently in South Africa? And if so, what measures are the JSE putting in place to overcome these?
So to the first question of are there barriers? Yes, they are. And I think that those are barriers that, you can pretty much copy and paste in most markets in the world right now. So
I think there's another barrier, I think, that sits above this to some extent, and that is the perception one. And it's something that I think a lot of the data is coming out now to dispel, in terms of, I would probably put it as a myth, in that ESG investing or, disclosure or whatever actually is contrary to the profit objective, or somehow if you invest using ESG guidelines, you're going to have some give up on your actual investment return or the like. And I think there's mounting evidence that's saying that's not the case. And in fact, just look at the period we're in now. This is a global crisis, and many ESG-focused investments have proven to be more resilient than your traditional benchmark investments. And, there's just reference the FT. Anybody online, go now and go look at the FT. You'll find articles in that regard on Bloomberg and the like. And so that is the first one, is that the perception barrier, I think, has been a big one. And the second one has been the lack of buy-in. Now, this is more particularly, I think, from the company side, the producer of the data and the information, to say that, yes, we're tracking this, but why does it matter? And one of the challenges that we often see when we engage with listed companies is they will say, look, when we go on our results roadshow, which, everybody puts a fair and enormous amount of effort into, not a single investor or very few will ever ask us anything about ESG, about sustainability. So why should we bother? It takes a lot of effort. It takes a lot of time. It takes a lot of convincing at the senior levels as well. And, I'm being honest about the fact that these are the challenges that we're hearing from companies facing. So that's the other one, is that investors are not interested. So when we put those together, it creates sometimes a bit of a difficult environment for the disclosure to happen if you're not being convinced that people are using it. But now that we're seeing that globally investors are looking at that, we're hoping that that is an inflection point that will change behavior everywhere, definitely locally. We certainly are seeing locally that there is a huge uptick in interest. And I mentioned earlier the sort of 2-year view, that suddenly in the last 2 years there's a lot more interest. I would accredit some of that to the fact that more of the ESG type information is becoming more measurable. So that was another barrier, is the fact that the perception exists that a lot of this is not measurable, therefore not financial. And to the extent that we are completely, sort of trained to think only on the financial bottom line and the typical sort of measures and models that we have, it becomes difficult when you're considering ESG factors. So these are some of the issues I think are coming up. In relation to what the JSE is doing, the second part of your question, I've mentioned already what we are doing to create this enabling environment for better disclosure to happen. So we do believe that, considering disclosures at the more the governance level is the right thing to do, and why that matters. Education is another one. Education is being able to, make sure that there's just more and more of this that we can push out, that we can have better engagement, that we can promote in the market to the extent that that's possible. Training for those who are on different parts of the sustainability awareness spectrum, and enabling different parts of that spectrum to come online and understand why it matters. And I think those are some of the things that we're doing. The issue, another barrier that Elena alluded to, was the lack of standardization and the fact that, there's this alphabet soup of frameworks. So that has been something that we've been very aware of now for 15 years as this entire discourse has developed. So, what do you do? So effectively, I think we have to continually push the narrative that we need to go back to understanding what is your business model, how does that affect society, how does that affect your value creation process and your value creation story, and then from that extract your material issues and consider that as the lens for your ESG disclosure and reporting. So it's about pushing right back to saying, this is not about producing a report and ticking the box on 20 indicators. This is about saying, do I understand, using this additional lens of these different factors, how my business is running, what my strategy is, and how these impact me and how I impact on these factors. So that is kind of what we have been pushing as an exchange in relation to dealing with the barriers, but also promoting better behavior.
Okay, wonderful. Tinuade, I want to also turn to you here. So we obviously spoke about the sustainability disclosure guidelines from the NEC a little bit earlier on, and Shameela's just alluded to, the interaction that they have with corporates. What types of industry consultation or education has the NEC undergone with stakeholders, whether they be listed firms or private investors, to ensure a proper understanding of ESG and standards of disclosure in the Nigerian market? Tinuade? I think we might have lost Tinuade again. Okay, Elena, I'm going to turn to you here then. So what initiatives have Refinitiv launched to help corporates and investors overcome the data standardization barrier? Can you give us a little bit more insight about that?
Sure. Refinitiv has been serving the global financial community with ESG data insights and workflow solutions for 2 decades now. And we've done quite a lot of work to influence and shape the industry, the definitions, standards, and requirements to really embrace quicker and integrate ESG into financial processes and decision making. I think that in terms of investors, what's important to say is that although we face the challenge right now of multiple standards, many different definitions, not clear guidelines for the companies on what they're expected to track, monitor, and report on, we are still successfully managing to offer a highly standardized, comparable, and reliable ESG data set to the financial industry to inform investment decisions, to enable them to design ESG products and solutions to meet the emerging needs of the customer base, to align with impact requirements, as well as start properly assess the risks and opportunities that ESG issues and teams create and impact company valuation. I guess one of my favorite metaphors to think about ESG is that of an iceberg, where at the top of the iceberg is financial data and reporting that informs traditional valuation processes and workflows that the industry has been using for decades. But what lies beneath the waterline are tremendous and bigger risks and opportunities that are really important to be properly understood and factored into financial processes and workflows. So that comparability of the two, of financial data and mapping it and aligning it with ESG data, is critically important, and that's what Refinitiv has been focusing on. The other thing that I think it's important to mention is not only what data is currently available, but helping the industry define and provide the needed guidance for companies in terms of what ESG data is needed for the future to inform investors and enable them to allocate capital towards the transition, towards this framework of the 17 Sustainable Development Goals. As this is where the future economic opportunities for the financial industry will be created. Refinitiv was a founding member of the Future of Sustainable Data Alliance, which was launched at Davos in January this year, with exactly that objective, to work with industry leaders, with partners, and develop in the areas where there is little maturity, like under environment, if we think about biodiversity or plastics and circular economy, there is little maturity in terms of definition, standards, and implications for financial professionals. However, these issues are critically important and do present quite significant opportunities, as well as risks for a number of industries. So helping shape that thinking and definition for the future is really important. When we talk about companies, I mean, this is the role that data providers like Refinitiv play in the ecosystem. we do make the connection between companies and corporate disclosure and transforming this information, which tends to be quite siloed and company specific, into comparable data set that then can be applied at scale across large portfolios of assets, which is what investors needed to look like. So companies clearly it's very important to give them the needed guidance in terms of what information the investment community needs. And in addition to working on that with individual companies throughout the years, we've also created a contributor tool which enables companies to come in and see how their ESG disclosure translates into what investors actually need. Benchmark their information and performance relative to the peer companies, and thus inform their future strategies and reporting guidelines with actual data and insights that they can extract from them.
Great. That's very interesting. Thanks very much, Elena. I think I want to move to some of the audience questions now. And I think, Tinuade, seeing that we've got you back, I'm going to pose the first one to you. So we've got a question around the role again, but more specifically towards sustainably financed projects. So one of the audience members would like to know, what are the specific roles of financial institutions in Nigeria in ensuring that projects are sustainably financed?
Okay. So I think that that question, so there are a number of financial institutions in the financing process, whether you're talking about the issuing houses or the brokers, the folks that do the structuring and otherwise just assist the company to come up with a financing program. I think the role that they all have is to look at what the finance is needed for and see whether there's anything that can fit. Let me explain that a bit further. So if you have a dam, for example, you want to build a dam for the purpose of hydroelectric power. I think it's the role of the financial institution to have informed itself about the context. And when I say the context, I mean things like, what are the SDGs? What does the Paris agreement say? What do the disclosure guidelines say? What is the frame of reference in the capital market for sustainability, and see whether the things that the company wants to do, you can fit them in. So I use the example of a dam. Nigeria is a place where we have significant infrastructural challenges. It's a place where we have, and West Africa, where we have food security issues. It's a place where climate can affect a lot of what our companies, our producers do in terms of the agribusiness, whether it's cash crops or food crops. So it is the job of financial institutions to not think about the normal thinking about, but to realize that there are other pockets of financing and present these to the companies as options of what they need to do. It's the job of the financial institutions to prepare them to be able to do sustainability reporting. It's the job of financial institutions to look at them and say there are certain types of talent pools that you will need to be able to operate in this space, to prepare yourself to come to this market and be attractive to these types of companies. So there's a lot of things that financial institutions need to do to themselves, upskill themselves, to make themselves knowledgeable, and to join the appropriate standard setting institutions. Standard setting institutions that you can either remotely follow, such as the folks on the principles so that you appropriately advise your clients as to what they should be doing in order to be able to access the market. So I think it's really just a question of education and putting yourself in a place where you can actually be of help to the company that needs to come to the market. I think that's really what financial institutions have to do. And at the exchange, we're very open to collaborating with people and entities that are in this space so that we can continue to grow the market.
Great, thanks, Tinuade. I think we're at time, but Shameela, there's one question that came through to you that I think if you can answer it in 1 minute, that would be great. So one of the audience members have asked, being a listed company on the exchange you manage, do you ever encounter any conflicts of interest? And if so, how are they then managed?
Sure. So the issue of conflict of interest between being a listed entity but also a regulator is one that's not new to the exchange environment. There are a number that are there. I mentioned earlier on that there's the Chinese walls between the regulatory divisions, the issuer reg and the surveillance divisions, and the rest of the business. So effectively, we're not allowed to speak to them within the business and the like, unless it's very controlled circumstances. In relation to the policing of the JSE Limited's own listing, that is not done by the Issuer Regulation Division. That would be a direct conflict. That is done by the Financial Sector Conduct Authority, which is effectively the regulator that sits above us. So just to dispel any fears, we don't regulate and police our own listing as the JSE Limited. That is done by the FSCA.
Great. Appreciate the short answer there. There are some questions we didn't get to, so those will be answered over email, if that's okay with everyone. And with that, we'll be wrapping up. I'd like to say thank you very much to our three panelists. It was a great discussion. And also thank you to everyone of our audience members for joining and taking the time out to listen to our discussion. With that, we'll wrap up. Thanks, everyone, and goodbye.
Thank you. Bye.